right, with regards to donations tax. All right, so I want to see some examples and how to go about it with regards to donations tax. All right. So remember, we mentioned that with regards to donations tax, it is taxed at 20%. All right, for aggregate value of assets, which is less than 30 million. When the assets exceed 30 million, they're taxed at 25%. Right, but now, all right, I'm sure some of you were asking, how do we know? All right, if the aggregate donations are more than 30 million and all that. All right, so with the UNISA rule, all right, with regards to this, they'll tell you, all right, you don't need to worry about the 30 million, all right, so the question in the test or the exam will contain the necessary information to determine whether the higher donation tax rate of 25% applies. So, but in most circumstances, we rarely use the 25%, all right, but should they do give it, they'll give you hints, all right, to tell you that the value of the donations for the period actually exceed 30 million. All right. Now let's look at question 1. All right. So in regards to this, to see what's happening. So there's a solution, of course. So it says determine the donation tax that John should pay on each of the above transactions. All right. Provide reasons if no donation tax is payable on any of the transaction. You can assume that the donation mentioned above are the only donations that John Doe had made during his lifetime. Now, you're sitting now with a question on donations tax. What is expected of you, right? Before you start answering the question, it's crucial that we understand the list of items which are exempt from donations tax. All right, approach on donations tax. All right, so we need to understand transactions which are exempt. All right, we need to understand transactions which are exempt from donations tax. All right, so we went through that list which I gave you guys. All right, where I told you that with regards to donations tax, you look at section 56, subparagraph 1. So I want you guys, if you haven't done it, right? I want you guys to highlight this section. I'm going to share with you how I highlighted my legislation so that you know these are the elements which are exempt in regards to donations tax. So you need to know all these items, all of them, right? You need to know so that, why do you need to know this? So that when they give you a scenario in the exam, you see that the element they give forms part of this. You just say it's exempt. All right. Let's look at the information that we have. So during the period 1st of March 2024 to 31 March 2025, John Doe was involved in the following transaction in his personal capacity. Right. John's monthly contribution to the local church, all right, local church, a public benefit organization approved in terms of section 30, subparagraph 3 of the Income Tax Act, was 1,000 per month. Now, do you see John is making a donation to an approved public benefit organization? Now, how do you answer this? You go to your list, all right? You see, now John is making a donation, all right, to a registered public benefit organization. All right, where is it? It's exempt, all right? Right, where is it? Here, H. All right, section 56, subparagraph H. So donation to government, municipality, researchers, political parties, public benefit organization, and recreational clubs. So you automatically know that, okay, because he made a donation to this, it's exempt. All right. But one thing I tell you is the risk about relying too much on the book is there's limited time. So I urge you guys, if you can, try to memorize these elements, all right? Because you don't have enough time to be running to and fro on the book, all right? Unless if you're too fast, but time is going to be a little bit of a challenge, of course, especially during the assessment there. All right, so we see that, okay, John is making a contribution to a church. Now, what is the trigger with regards to this? The church needs to be a registered public benefit organization. Do you see? Yeah, they're giving you the term to say that this is and approved, all right, in terms of section 30, subparagraph 3 of the income tax. So it means with regards to this is a registered public benefit organization. If John had made a donation to just a normal church, and then there's no mention if it's registered, then it's not exempt. All right. So you look at it, you deal with it, all right, like this. All right. You see, for this period, contributions to church. All right, with regards to this, so the mark that was awarded was with regards to exempt. All right, so sometimes in the exam, they want you to make reference to your legislation. So that's where you can now say section 56, subparagraph 1, subparagraph H. All right, then you write down exempt. So you record the total amount of the donation. So John was donating 1,000 per month. So you have 1,000 times 12, that makes it 12,000. Then you record exempt. All right, so in regards to this, that's the framework they normally award marks on. All right. So in regards to this, let's look at to the next part. All right. The next part now, all right, that we have in terms of this is with regards to he donated 8,000 to Sandy, his niece, as a gift of her wedding. So John is making a donation to Sandy. All right. So with regards to this, all right, we now need to understand what happens, all right, when you make a donation to your niece. Under what circumstances is a donation to a relative exempt? So we saw that a donation to a spouse is the one that's exempt, not to a niece. All right, let's quickly go there. All right, you see, section 56, subparagraph A, it says donation to a spouse, all right, or a trust in which a spouse has a vested interest. So when you make a family donation, so you're donating within, remember in most cases, you and your spouse, right, you're one, all right? So you're making a donation to your spouse, that's exempt from donations tax. You can, so in other words, SARS is saying, no, you can give to your wife or your husband or your spouse. You can give to them. We're not going to tax you, all right? It's exempt. So a niece, now the question is a niece a spouse? No, it's not a spouse. All right. So with regards to this, that means now this one is subject to donations tax. But this is your first taxable amount with regards to donations tax. Then you go up there. All right. So in terms of this, let's look at section 64. What is section 64 saying? Now, section 64, it says, subject to the following exemptions. Natural persons. So you look at, remember John is a human being. It's not a company. So John is going to get, right, in regards to, so actually section 56, subparagraph 2B. John is a natural person. He's going to get an exemption of 100,000. So which means now, right, John made a donation of 8,000. It's subject to donations tax. But now, however, because John is a natural person, it's going to receive the exemption of 100,000, limited to 8,000. So which means now the donation to Sandy, all right, is subject to donations tax, but John is going to receive an exemption, maximum of 100,000 during the year. There's going to be 100,000 limited to 8,000. Do you see that? Which means now in regards to this, remember John has used that 100,000, a portion of it. He has used 100,000 minus 8,000. So he's left with 92,000. All right. So transaction 2, let's write a little bit of notes in case someone is lost. So transaction 2, John made a donation of 8,000 to the niece. All right. However, since John is a natural person, you will receive donations tax exemption. Remember, we said natural persons receive an exemption of 100,000. So John is going to get donations tax exemption of 100,000. All right, limited to. So in regards to this, since 8,000 is less than 100,000, so we're just going to limit it to 8,000. So that's our limit with regards to this donation. All right. And then, so since that is being mentioned, right, we said, no, we're going to limit it to that. That means now, after transaction 1, which means from transaction 3 going forward, now John is left with 100,000 minus 8,000, which is going to give us 92,000. So from his annual exemption, right, his pocket, all right, he can still use, in other words, he can still receive another 92,000 exemption, right? So that's what's happening with regards to this. So wedding gift to Sandy, all right? So he's gonna get an exemption of this much. I believe you guys, you did highlight, all right, about this, the 100,000. All right. If not, please do highlight. If it was a company, it was going to get a 10,000 annual exemption for the whole year. Then natural persons, they get 100,000 exemption for the whole year there. Right. So that's what's happening. And then the next one, all right. John sold sectional title unit, which he owned to his mother. Right. So John is selling the sectional title to his mother. All right. He sold. All right. The market value of the unit was 1.4 on the date of the sale. The selling price of the unit he sold to his mother was 1,250,000. His mother is financially independent and John does not have to provide his mother with any maintenance. The payment terms were as follows. His mother took over the balance of 1,150,000 that he, John, still owed to the unit for the balance of 100,000. He granted an unsecured interest-free loan to his mother. The loan must be repaid on the death of his mother, right? A claim against her estate, right? So, with regards to this, all right, let's now look at it. All right, there's a lot of principles now in terms of this. The first principle that we need to understand is John is selling to his mother a house worth 1.4 is selling at 1,250,000, which means, remember, we mentioned that the difference, all right, if you make a sale at less than market value, the difference between market value and the amount sold for or the amount received, that will be donation. So which means now, with regards to the donation to the mother, all right, donation to mother. All right, so with regards to this, what's happening? In terms of this, donation, since the sale is for a value that is less than market value. All right, donations tax is calculated or is based on difference between market value and selling price. So which means now the amount that John is donating is 1.4 minus 1,250,000 that he is promised to receive. So that means that in terms of this, the donation now is going to be this amount. So that's what we have, the 150,000. That's the donation. All right. So which implied now, all right, with regards to this transaction, that imply now that John is subject to donations tax on the 150,000. But however, remember John still has that 92,000 exemption. You remember it's this one. So now John is going to have exemption of 92,000. Remember from that 100,000, so it's going to deduct 92,000, which means the remaining balance. So in terms of this, that's what he has as taxable donation. So John is going to have a taxable donation, which is going to sit as 58,000. Then, so donation tax.
I'm in class. Can you please call your dad?
All right, so you write down donations tax. Now, depending with the marker, all right, but it's essentially important that you show the rate as well that you're using. So you can say donation tax at 20%. So you find some markers, there'll be awarding marks for you knowing that your donation tax is at 20%. All right, so you will receive a mark in that regard. Let's look at it. All right, so for us to mother, 1.4 minus 1,250,000. All right, so in regards to this, you see that's the part that he has as donations tax. Now let's look at our question. We're not done. All right, let's look at this part. His mother took the balance of 1,150,000 that he, John, still owed to the unit. So in other words, the mother paid off. All right. For the balance of 100,000, he granted an unsecured interest loan to his mother. So in other words, John financed the mother. He gave the mother an interest-free loan. Now, I want you guys to understand, all right? Remember, we spoke about if you give an interest-free loan, all right, it's subject to donations tax. But under what circumstance? All right, interest-free loan, all right, interest-free loan or loan at less than market value, all right, is subject to donations tax if the loan is granted to a trust. Right? So that concept which we explained last week, where we said, no, if you give an interest-free loan subject to donations tax, it applies only if it's to a trust. Now, what is the examiner trying to achieve here? The examiner knows that you guys, right, when you study, you don't study completely. Right? You just say, oh, interest-free loan, it's exempt. No, interest-free loan to a trust is one that's exempt from donations tax. So the examiner, what they'll do now, they'll give you an interest-free loan, like in this case to the mother. All right, but because now we're used to that principle where we say interest-free loan is exempt from donations tax, all right, then we get it wrong. We forgot to say, no, it's interest-free loan. When you give a loan to a trust at no interest rate, that's when it's exempt. So it's with regards to Section 7 of Income Tax Act. All right, we're going to do more about Section 7 when we're dealing with the trusts. All right, so basically that's what we have with regards to this part of the question then. All right, so in terms of this, what do we have? 100,000 interest-free loan, not a donation. For donation tax, only for Section 7 interest-free loan, not to a trust or a company. So in regards to this, do you see there's a mark? So what are you supposed to know? Just supposed to explain that the 100,000 is not subject to, it's not a donation, right? Only interest-free loan or interest at lower rate given to a trust is one that's subject to donations tax. All right. So also remember with regards to trust, all right, if a trust receives a loan at a rate which is less than market rate, right? The difference between official rate and interest rate awarded is a donation. Right? So in this regard, let's say a loan of 100,000 given to a trust. To a trust at a rate of maybe 2%. Yet the official interest rate, maybe let's say 7%. Right? So in regards to this, we're saying no, the donation is going to be 100,000 times 7% minus 2%, right? Divided by 100 times. So you then multiply now with number of days from the date you gave that loan until year end. Then you divide with number of days in a year, right? Sometimes it's a leap year, sometimes not. So if it's a leap year, 366. If it's a normal year, 365. All right, so for tax, when you're calculating interest rate, right? When calculating interest amount, right? Always use days, not months, right? I know sometimes we're tempted to say, oh, they gave them the interest-free loan maybe in March. Then you say March, April, May, June, July, August, September. And then you see that, okay, maybe there's 9 months, whatever period they have. Then you say 9 out of 12. No. For tax, they want you to calculate how many days are there in March. You add the days for March, you add the days for April, May, June, and all those periods. then you divide by the number of days in a year. All right, so for tax, whenever you're calculating interest, regardless of you're doing normal income tax, donations tax, and all those things, please work in days, not months. All right, good. So that's that part. All right, and then let's look at the next part. All right, so we're done there. Now, John donated his Honda Civic to his wife. Do you see? Wife form part of spouse. To whom is married out of community of property. It doesn't matter. All right, the legislation does not state what type of marriage you guys have. As long as you're married, all right, you have spouse. In this regard, it's exempt from donations tax. All right, be careful. Sometimes they use the word ex-wife. All right, and they know that you guys, when you're in the exam, you're rushing to complete everything. You forgot. So ex-wife is not your spouse. All right, you're divorced. So there's no exemption. But if it's wife, yes, there's exemption. All right. So this one, I believe it was straightforward. All right. In regards to this is a donation to the spouse there. Let's look at it. All right. So donation to wife exempt in terms of section 56. Now, what's happening here? If the question is silent, all right, about quoting the legislation, don't stress yourself. No need to quote it. All right. Just write donation to wife exempt, then you move on. But if a question asks specifically state that reference to legislation, then you can make use of these references. All right. So it's crucial that we always remember in regards to that. Let's look at the last transaction. Some years ago, John inherited original painting from his grandmother. At this stage, the market value of the painting for estate deed purposes was 150,000. John donated the painting. The market value at the date of donation was 180,000 to JD Incorporated. You see, so the fact that John inherited this, right, for donations tax purposes, we're not worried about what was the market value when John inherited it. We're worried about the market value when John made the donation. So with regards to this, the market value with regards to the painting is going to be 180,000. That's the amount that John is going to be taxed on. All right, so we have painting. All right, remember John has already utilized the entire 100,000 there. So there's no exemption with regards to this. All right, but let's see which period it is. All right, so in terms of this, which date is John making this donation? All right. This is March 2025. Do you see where the catch is? Remember now, it was just a concept of understanding that John is a natural person. Right? Which means now tax period for natural person, right, runs from 1st of February 2024 up until, so not 1st February, 1st March. So the tax period runs from 1st of March 2024 up until 20th February 2025. So this is, whenever you see a question on natural person, this is the period they will examine you. Now, why they're not asking us for the other tax period? Remember, the legislation, right, the act that you guys use is for 2024, 2025. It doesn't have 2026. Why? Because the budget speech for 2026, like in this instance, hasn't been announced. All right. Even though if it was announced, remember now the legislation has already been printed. So we're 1 year behind. All right. In terms of our standards, we use the previous budget speech. All right. That's how we go about it in terms of our legislation. All right. So in terms of this, because this donation is for March 2025, which is another period now. That means, remember, each and every year, John is getting 100,000 exemption. So he made a donation of 142. All right, that means now he qualifies for that 100,000. All right, so in this case, the donation of the painting 180 less than 100,000, then donation takes at 20% will be theirs. Any questions, guys? Questions, guys? All right, let's look at this one. So, determine fabulous fashions, donations text. Do you see now? We're now dealing with a company. It's no longer John. This is now a company. All right, we're dealing with a company here. So, Fabulous Limited, donation tax liable, if any, in respect of the donation made to its wholly owned subsidiary. Substantiate your calculations with reasons. Furthermore, if donation tax is payable, indicate when the donation tax is due to start. You see, it's important. Assume that this was the only donation made by Fabulous, right, Fashions in respect of the 2025 year of assessment, and that the total amount of previous donation made amounts to 2 million. So the other donations which Fabulous made amounts to 2 million. Now, before we answer this question, let's look at what's happening, all right, in regards to this. When is donations tax due? What did we say? We say donations tax is due at the end of the following month after donation, all right? Due date of donations tax. All right? So donations tax is due on last day of the following month of donation. That's what we said, right? So if you make a donation today, 25 February 2025, that means now you're subject, in other words, you're required to have paid donations tax by 31 March 2025. That's what it means. Right. And then the next concept, why are they telling us that Fabulous made previous donations of 2 million? Why are they telling us that? All right. So in regards to this, all right, because Fabulous has already made a donation of 200 million, all right, it means now Fabulous is not going to get that 10,000 exemption because Fabulous as a company has already utilized the 10,000 when they had the 2 million, all right? So in regards to this, the reason they're telling us about previous donations or the impact previous donations of 2 million is that Fabulous no longer qualify, no longer has anything to utilize exempt on the 10,000. So Fabulous is already utilized the 10,000 which you spoke about. Remember, we said companies, they get an exemption of 10,000 there. All right. So in regards to this, let's look at it. All right. So in 20 January 2025, Fabulous Fashions donated stock with a market value of 120,000. All right. Cost price was 100,000 to its foreign subsidiary, Fashionable Trends. All right. Fashionable Trends is a wholly owned subsidiary by Fabulous and registered in the United Kingdom. All right. So, with regards to this, all right, let's look at who's exempt from donations tax. All right, let's quickly go to our list of exemptions. All right. All right, so donations of property outside of SA if acquired before resident and other. Donation to government. All right, donation made by a trust. All right. Donation by a public company. All right, donation by a public company. All right, donation made to resident company that is part of the same group of companies. Now let's look at with regards to this. All right, do you guys have your legislation? You do have, right?
Yes.
All right, can we go to section 56, subparagraph R? All right, I want to see what's happening with regards to that. Right, they wanted to catch us, but let's see what's happening there. Let's quickly go there. Right, section 56, subparagraph. All right, so that we see what's happening in that regard. So you guys will let me know once you get there. Now, this section, do you see, it talks about donation made to a resident company. Two. So in other words, the donee needs to be a resident company. So six, RSS by a company to any other company that is a resident. So now let's look at this. All right. Is Fabulous donating to a resident company? Do you see the subsidiary Fashion Trend? They form part of some group of companies. But however, Fashion Trends is non-resident. That makes now the exemption is no longer applicable. All right. So question 2. All right. So that you can see how sometimes the examiner try to trick us with regards to tax. All right. So in regards to this, because the subsidiary company, right, donee is a non-resident company, right? Because the subsidiary company is a non-resident company, the exemption is not applicable, right? But if it was a donation to a resident company, all right, same group of companies, all right, but if they twisted here, where they said, no, with regards to this, all right, it's not a foreign subsidiary, but it's a South African subsidiary. In that case, it was going to be exempt from donations tax. But because this foreign subsidiary is non-resident, that means this transaction is subject to donations tax. Let's look at it. So in regards to this, all right, they made a donation of how much? 120,000, all right? So donation to foreign subsidiary, 120,000. No specific exemption, all right? Cannot apply as donee is non-resident, all right? And then general exemption under section 56(2), which is the one that we talk about, the 10,000, is not applicable because they've already utilized the 10,000 on this 2 million. So then donations tax, 24,000, which is 120 times 20%. Now, they asked you, when is donations tax due in regards to this transaction? Let's look at it. Do you see they made a donation on 20 January 2025, which means donations tax is due on the end of the following month. The donations tax is going to be due on 20th February 2025. I don't know if donations tax is sinking in or I'm losing some of you guys. All right. I hope everyone is fine there. All right. Let's look at this other transaction. James Sekele provided the family trust, the Sekele family trust, with an interest-free loan. Do you see now? This is an interest-free loan to a trust for 1.1 million on 1st of February 2025 to fund the trust acquisition of an investment property. A market-related interest rate is 10%, assuming an official interest rate of 8.75%. So, in terms of this, all right, if we look at it, all right, do you see? This is an interest-free loan to a trust, which means now it's going to be subject to donations tax. Now, let's look at this. All right? Assume that the value of James Sekele prior donations exceeded 30 million. What does it mean? Why are they telling us that? It means now we're not going to use the 20%, all right, rate that we've been using. We're going to use 25% because the donations that this James made in the prior year is more than 30 million. So we're going to use this rate now. So how are we going to go about it? All right, let's see. So we said the difference between the official rate and the rate they charge. But in this case, it's an interest-free loan. So which means we're going to calculate our interest. So we're going to take 8.75 times 1 million times. Now, when did James make the donation? 1st of February, which means now this donation is only for 1 month. Do you see? So 1 million times 8.75 times February is 20 days, 20 over 365. Then we didn't say 1 over 25. No. So 1 over 12, I mean, no, that would be incorrect. Use the number of days when you're prorating your your donation or your interest, I mean. Right. Then, of course, because it's in James' first donation, is going to get 100,000 exemption, the annual exemption there, which means now the taxable donation amount is 0 there. All right, let's look at the last question. Simple married out of community of property. Set up a
Sorry, yeah.
Yes, ma'am.
I
Yes.
would have said 100 minus the 8.75. What would I have been doing wrong there? I mean the 10 minus 8.75.
That one now would be wrong, right? Why? Because for starters, the loan, you give the loan, you're not charging any interest. Do you see that?
Okay.
So you're not charging
Mhm.
interest with regards to the loan. So in other words, which means the family trust is not paying any interest. 2, we use official interest rate, not market interest rate. All right. So we use, all right, in tax, when calculating interest, use official interest rate, all right, to calculate our interest. Then when given repo rate, sometimes they can give you a repo rate. So we add 1 to make it official rate. What is a repo rate? So in most cases, a repo rate, this is actually the rate that banks borrow at. All right. Remember, banks borrow money from the Reserve Bank. I'm sure you guys agree with me. All right. You know that, right? So the banks that borrow money from the Reserve Bank, they'll be charged at the repo rate. That's why you find that in most cases, when you seek a loan from the bank, they're going to charge you the repo rate plus. It means now that plus is their profit. All right. So sometimes the banks, when they don't have enough money, they borrow money from the Reserve Bank. All right. So to convert now from Reserve Bank, which is the repo rate, to official rate, we add 1. All right. So for example, the repo rate is equal to 7%, which means now official rate will be 7% plus 1%. So that's how you go about it in terms of your calculations there. So that means the official rate will be 8%. All right, so we don't use, I know in your MAC and your FACs, you use the market rate, all right? But when you talk about the interest rate, all right, for tax purposes, we use the official interest rate. All right, if the official rate is not given, that's the only time that you can use the market interest rate. All right, so if official rate is not given, or repo rate is not given, then use market rate. All right. So that's how we go about it in regards to our calculations there. Are you answered there, ma'am?
No, I think maybe I'm just confused because I would have said,
Mm.
you know how you said donation would be the difference between the official rate and the interest rate given. When do you do that then?
No. Remember, we said if, assume it was not an interest-free loan. Interest-free means they are not charging them any interest. All right.
Yeah.
So interest-free, it means no interest charged at all. All right. Now we said, assume they charged some form of interest. All right. So in this regard, assume that our taxpayer, James, assume James charged maybe 5% interest to the trust. It's a low interest loan. All right. Assume James charged a low interest.
No, thank you. It makes sense. I get it now.
Yeah. So
Yeah.
there's difference between low interest and interest free. So we net off when it's a low interest.
Okay.
All right, cool. So that's how we go about it in that regard. Then let's look at our last example. All right, so this is that. All right, so they gave a low interest loan, all right, the acquisition of the investment property. All right, so how are you going to go about it? We did it. Let's look at this part. All right, Sipho married out of community of property, set up a family trust, Sipho Trust in 2021. 17 July 2024, you advance a total amount of 2,800,000 to the trust as an interest-free loan. The trust used the loan process to the acquisition of an investment property on the cost in Umhlanga, Durban for an amount of 2,800,000. The property was purchased on 18 July 2024. The day after the loan was received, rental received until year end amounted to 150,000. The beneficiary of the trust do not have vested right in the income or capital of the trust. The market-related rate for the 2025 year of assessment was 10.25. The official interest was 8.25. Right. So in regards to this, because SIPO is making a donation of interest-free loan, so we're going to do the calculation. Do you see? 2 million times. We said we use official rate, 8.25. Minus, why are we saying minus 0? Because this is a low interest. Oh, sorry, this is an interest-free loan, not a low interest. If it was a low interest, we're going to deduct the interest they charge. Times what? Where's 227 coming from? 227 now is coming from the day SIPO gave the loan, right, to this trust. Right? Do you see? So in regards to this, do you see? 17 July, SIPO, that's when the day advanced this amount to the trust. All right. So in regards to this, we now need to calculate how many days are there from 17 July 2024 up until 20th February 2025. So number of days between 17 July 2024 up until 20th February 20. How do you go about it? You have to determine. So how many days are there? All right. So you have July, August, right? September, October, November, December, Jan, Feb. All right. So Feb is 28, Jan 31, December 31, November 13, October 31, September 13, August 31. Then here, so let's count. How many days are there? 17 July. So 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. How many days are you guys getting there? I'm getting roughly 15. You guys, how many are you getting? Let's see. 227. So they got 227. So that's correct. All right. So start counting from 17 July, the day the loan was issued. All right. Not to say I'm going to start counting the following day. No. You start counting 17 July, that's 1. So 17, that's 1. 18, 2. 19, 3. All right. Going forward. Then you get 227 there. Then you deduct your 100,000 on your exemption. Then the rest you multiply with 20%. That's how we calculate donations tax. Questions, guys?
No questions.
All right. So I urge you guys, can you guys look at this? All right. Please look at these examples. Very good examples. All right. I think they will assist us as well in regards to our studies there. All right. Otherwise, have a good evening. All right. Like I told you when you started, guys, I know the journey is not easy. The workload is piling. Work is also demanding, but do not give up. All right. Everyone you see out there smiling, they have a story. All right. They have a story. It's just that you are not there when the history was created. But everybody has a story to tell, right? So continue fighting until we get there. No one is smarter than the other. I'll be honest. The people with natural intelligence, there's only a few with high IQ. The rest is hard work. That's what separates most of the guys who pass and those who don't. It's hard work. That's the truth. All right. Never feel like, oh, this one is smarter than me and all that. No. Those are lies. Mostly it's hard work. All right. So put in the hours, have discipline, you make it. All right. Have a good evening, guys. Bye.
Bye.
Again.
Bye.
Bye.